Your prime trade of the day is going to be on Amazon here. See what I did there? Look, sometimes it is about the best learning experience, because I'll tell you right now, I came in thinking one direction and was able to save a bit of coin by flipping in the other way. And it's all about being able to accept what is happening in the overall market. So as we set this one up, I want to keep in mind, yesterday you had a huge flush at the open overall in the market, had a lot of longs I was looking for, and had to flip to the shorts. That was a day saver. Today was a bit of a different story. Amazon may have been down on EPS and actually lost money, but that was because the Rivian loss. Really, it was a fantastic quarter, as reflected by the fact that they were gapping up. Since the split, maybe the biggest move you've seen, obviously, overnight, and you're going to see the humongous gap up. Now, on a Friday, end of week, end of month, travel so far, and in the pre-market, we're already heading to the downside. All I was thinking was gap fill. Gap fill was the first thing I wanted to see. I was looking at the 135 level. We're holding below that 135, started to slide down. You could start to see the selling come in, and I was working off of that short, right in front of 35, using 36 as a hard sort of stop there. The scalp trade was starting to work out. We start rolling down at the open, and this is where things get crazy. All of a sudden, right at 9:30, you start seeing, we call it like, quote, levitation, where you're moving down 40 cents at a time, up 50 pennies, down 60 cents. Really, you're just having big market orders come in, and there's almost no liquidity. So really difficult to read the tape in that point, so you have to take a step back and slow down. And one of the first things I saw was we then took out the 134 after a wick top. Like, you put a wick top through 135 and then take out 134. I was sitting on the bid and didn't have time to cancel my bid at that point, and was angry that I had gotten some shares out, because I'm like, oh, it's going to flush now. I'm thinking 130s. You just failed to break through the top. There's not a lot of liquidity. We're going downside for sure, and I'm going to be able to hold this for a bigger move. And then right after that, we then make this little consolidation bottom, and then you get this monster candle. Now you're a few minutes into the market when things have settled down, and then I'm taking that 134 up the you-know-what. Suddenly, this looks very different than it did a second ago. That is a usual bearish sign of which I'm expecting a consolidation at the next level down. I've seen wick-off tops when they trend to the downside. Almost never are you going to see that kind of a move back up, followed by another strong move into the high of the day. And this is where, when I took that fill, immediately on the show, I was like, this short that we're rolling into, this looks like a wick bottom now. That wick top was a fail. On the bigger time frame look, when you zoom out a little bit, when you have a look at what's actually going on at that bottom, that is a wipeout bottom. It was a strong quarter, and the market looks strong. We're just going to have to accept this is not a short at this point. And I'm not waiting around. I'm just getting out at that top. I'm not going to wait for a better price and then work into along to the high of the day. It was that quick decision to say, this is not right. Now, the long only gives you 36, get a buck 50 into that high, never even takes out the high. But it's really more about preserving your capital in this situation. It would have been easy to average into the short, get back into the short, see this wick top, average into the short again because it put another wick high. What am I doing? Giving it to the high of this wick, just losing more money because I doubled up the shares, or giving it to the high a day even and losing even more money? No. Let's not do that. Let's be able to accept the fact that it was a strong move. Yes, I do like mean reversion. Yes, I do think when you have a gap fill, if you see signs for that short, it makes sense to try and take a little bit of it. But if it wants to go up and the market's too strong and the name is too strong and it gives you a setup the other way, you've got to be able to take it off and preserve that capital. Ultimately, Amazon's up 12%, and it's a super strong name. You want to trade names like this, learn and do better with your trading. Well, Day Trade the World is the best place to do it. This trade of the day is sponsored by Day Trade the World. Check out that QR code below. Open up your office and see if you can hit some trades like this one.